Ladies and gentlemen, welcome back to the channel. It looks like Citi just gave AMC a $1.60 price target. This is a bunch of baloney. We're going to get into exactly what they say about AMC and how they're just ignorant at this point or unknowledgeable on AMC, which save your price target, dude. Don't even initiate coverage if you have no clue what you're talking about in regards to AMC specifically. So that's going to be a part of this video, as well as an intraday update on everything else that is going on. We are getting some new information from the banking crisis, more specifically focusing on Europe today and Deutsche Bank out of Germany. Not so good things happening over there. As well as that, you did have economic data that did come out today. AMC GME looks to be in the green so far. We'll see how we kind of wrap up the trading day, but nonetheless, so far so good. Let's get into all of this information, guys. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you have not already, I don't know what you're doing. It is free $99 and it costs you nothing. Now, first things first, check this out. AMC stock price predictions. Well, AMC plunged to $1.60. Okay. Citi yesterday started coverage of AMC with a sell rating. The bearish note. Citi analyst Jason Bazinet yesterday launched coverage of AMC stock with a $1.60 price target and a sell rating. According to Bazinet, AMC shares are, quote, overvalued. The movie theater owner may have to sell more shares in the future to keep itself afloat, lowering the stock's value. Citi is also concerned about AMC's high debt levels. The analyst warned that the firm would also have to unload about 77% more shares to eliminate its debt. I don't even think that is terrible, right? 77% dilution, which I get it. It sounds like a lot. It is a lot relative to what other companies do. To get rid of all of its debt, I don't think that is necessarily a bad trade-off. Now, as you guys do know, AMC stock has historically rallied when they have, number one, paid off debt, but issued new stock. The stock almost always has rallied. And I think if you got rid of AMC's debt from here, a short squeeze would likely ensue shortly after or almost instantaneously once that news did broke that AMC was a debt-free company. Now, biggest problem they are going to have if that was the case is they are still unprofitable, so they would not remain a debt-free company. So I think if AMC can get its profits right, and I think this variable pricing on movie theater seats is definitely going to help, as well as a strong consumer that wants to go out and see movies, especially with this upcoming movie lineup that we have throughout the rest of 2023. I think it bodes well for getting to a place of profitability, and then ultimately, if this does happen and they do pay off their debt, that's going to be very positive catalyst. And this analyst with a $1.60 price target, I think, has completely lost his mind, and those are just a couple of reasons why. You guys can infer the rest of it. Now, don't be confused. This guy is not a good analyst in regards to other analysts. TipRanks reports that Bazinet is a 3-star analyst with an average return of, get this, 0.5%, 0.5%. You could do better in anything. I mean, literally anything, any investment, any dude. You could do better with Apple's dividend than this guy. So that's not even appreciation of Apple stock, just the dividend alone. So, and you don't think of Apple as a dividend stock, right? Nvidia, right? So has also a better dividend yield than that. So I wouldn't take it to heart too much. And he only has a 56.94% success rate. Most good analysts have in between 65 and 75% success rate. So this guy is definitely on the lower side of things. And not trying to necessarily slander him or make this personal about him, but I think it's just very, very uneducated to come out and give AMC a price target like this when you don't know the demographic of investors here. We don't give a shit if it's overvalued. We know that. Just like hedge funds know they're shorting AMC that will ultimately end in a violent short squeeze. Like, they know that. It's like what's that game? Duck, duck, goose. You play as kids. You go around the circle. You know eventually somebody's going to fucking pluck your head and you're going to have to chase them around like a crazy person. But I don't know. Maybe it'll happen now. Maybe it'll happen later. That's what these shorts are doing. They're literally just getting in and out. They're waiting for the short squeeze to ultimately happen. They know it's going to happen. It is not even a question at this point. So just my thoughts on it. I wouldn't be too concerned about what we're seeing. Obviously, AMC stock is not as well. You have went up over the past 2 days now. So this really didn't do anything to affect AMC stock, likely for the same reasons that I am pointing out to you guys. That's the first bit that we need to talk about here in this video. The second thing we need to talk about in this video is Deutsche Bank. Now, this note says Deutsche Bank is not the next Credit Suisse, analysts say, as panic spreads. Now, why panic is spreading is because last night, Deutsche Bank's credit default swaps, if you guys don't know what these are, it's essentially like the Big Short, right? The way that they actually shorted the mortgage-backed securities, the bad MBSs, was with CDOs, right? Credit default swap. Well, now they're called credit default swaps, CDOs, credit default obligations, whatever word you want to put on it, same thing. You essentially can buy these. They're kind of like options, right? So if a credit default swap is $100, it's going to protect you $100 in case the company goes bankrupt. Well, a company like Apple, you're probably going to pay like 50 cents for that $100 of protection, maybe 25 cents, because there's just no mathematical way that the Apple is going to go bankrupt. Something wildly insane. I don't even think it's a possibility, right? So the insurance is very cheap because, I mean, after all, it's not going to happen. Whoever's selling you those CDOs and CDSs, it's basically free money for them, right? So if a company is like low, still not a high chance of going bankrupt, call it, I don't even know a good example of a low risk company. Maybe they sell for $10 or 10 cents on the dollar, better way to probably put it. And then you have your mid-grade companies. That would probably be something like a Rumble, because I'm looking at the stock right now. A Rumble or a Lucid or companies like that, right? Maybe it's going for 30 cents on the dollar or 25 cents on the dollar. And that's still kind of high-ish. Well, Deutsche Bank seen their credit default swaps go to about 60 to 70 cents on the dollar, and it does depend on what quality they are. There's different kinds, right? Those instruments can get pretty complicated, but the spreads, the amount you have to pay for protection with Deutsche Bank just went bonkers last night, and that shows somebody out there is getting fearful that Deutsche Bank is also going to go bankrupt. And it says right here, Deutsche Bank shares slide after sudden spike in the cost of insuring against its default. Not good. Not good. And Deutsche Bank has 3 times the amount of assets as Credit Suisse did have, in 8 times larger bank than SVB. So this would be very much a lot worse if this did happen to Deutsche Bank, right? So that is one thing that is ultimately happening today that is kind of moving things around quite a bit. Markets were down about 1% at first to start off the day. Now you're in green territory for most of the indexes. The NASDAQ is the one that is slightly lagging behind here today. Nonetheless, not a very positive development. Now, on the front of economic data, we did get durable goods orders, negative 1% for February. In January, you were negative about 5%, and that's really bad. Negative 1%, not as bad, but it's still contractionary. It's still showing the economy's not really doing so good. You were expecting 0.7% positive, and you came in negative 1%. So expectations were way off. Economists just have this completely wrong, and not so good for the economy. Now, at the same time, you had S&P Global Composite PMI for March. That came in at 53.3. The forecast was for 49, so you are showing a little bit more of those inflationary pressures. And you also had Fed Bullard that did speak, trying to calm down markets around this banking crisis, that things are contained, blah, blah, blah. So that's really what you had on the day. Nothing too crazy, nothing too out of the norm compared to what we've seen over the past couple of weeks. Nonetheless, if you take a look at AMC stock, AMC is flat on the day, unchanged at all so far. You were up a decent little bit. You did hit over $4.50 per share. You're currently trading at $4.47 per share right now. It's been a pretty close range overall today, so you really have not done all too much. I think the high was $4.55 per share today. The low was around $4.37 per share. So it's been like 10 cents up or down for a vast majority of the day today. Now, I do want to see AMC get above and stay above $4.50 per share, because even on March 22nd, where you ripped above 450, hit a high of 475, you closed at $4.34 per share. You have come up intraday 1, 2, 3, 4, 5 times now above 450, and you have not closed above it once ever since March 14th, when you dropped 15% from obviously about $5.50 per share down to $4 per share. You still yet to close above 450. Now, even if that happens in after hours, that is what I want to see. That opens you up for room to make your way higher to almost $6 per share once we get any news about April 27th. And I do think news is coming in regards to the core efforts and the litigation that we are going to hear. But really, why I want to point out the $1.60 price target for you guys is because, I mean, either way this goes, in my opinion, you get a short squeeze. Whether AMC does dilute shareholders, right? You and me, they raise capital, they pay down debt. Well, short thesis is gone at that point. There is no short thesis at that point. Or if the courts do not let this vote go through in the current way that it did happen, well, again, I think that also gives you a short squeeze, because a lot of people are involved with AMC, short on AMC, because of this whole arbitrage trade that would otherwise not be short on AMC. And as you see right here, the official short interest positions changes in AMC. The settlement day for March 15th that was just released today, you had 24.64% short interest of free flow, 127.21 million shares that were sold short. Days to cover at 4.45. So even after March 14th, shorts did not cover on their short positions. From February 28th through March 15th, short interest actually went higher on AMC by about 2 million shares. So shorts indeed did not cover after March 14th. Cost to borrow average for AMC sitting at 357.65%, cost to borrow max at about 400%, and cost to borrow minimum at 85%. Interactive Brokers has not given us an update on the cost to borrow rates today or the shares available. Well, we did get a shares available of 0 earlier today. We've gotten one reading. Cost to borrow rate last time we knew was about 214%, guys. So numbers looking very, very good and prime for a rally to the upside. We just need new information on the court litigation on April 27th, or hopefully before April 27th, we get a new update, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.